program is brought to you by realestate.com.au. See more of every property on the realestate.com.au app.
Welcome back. It's time for our weekly auction report. There were about 2,700 auctions held across the country on Saturday, returning a clearance rate of about 59%. Sydney held 1,025 auctions with a clearance rate of about 52%. There were a further 1,810 private sales in New South Wales. Melbourne held 1,148 auctions with a much higher clearance rate of about 66%. There are also 1,360 private sales in Victoria. Brisbane held 83 auctions with a clearance rate of almost 64%. There were about 1,000 private sales. In Queensland, Adelaide held 65 auctions, clearance rate of about 68%. There were also about 300 private sales in South Australia, and Canberra held 87 auctions. The clearance rate was 65.5%. There were also 130 private sales. So let's bring in here Anne Flaherty from REA Group. Anne, good to see you. Let's start with the auction numbers. They look pretty strong this time of the year.
They are pretty strong. I think we are seeing quite a lot of buyer demand at the moment. We're certainly seeing some pretty robust clearance rates, particularly for so early on in the year. I think that sentiment is pretty strong, despite the fact that interest rates have increased this year. So I think it's quite encouraging to see.
You've got your property price report out today. Median value of a home in Australia's capital cities has now surpassed $1 million for the first time. That seems like a pretty big milestone.
It's absolutely a big milestone. It's one that we knew was going to happen sooner or later, but to finally see that the median price of a home across Australia's capital cities is now above that $1 million mark is very eye-opening. It could be quite concerning. And particularly if we look at the undersupply of homes we're seeing, I think we're likely to break new records over the coming months as well.
Yeah, looking at that report for February, what areas of the country are performing really well?
Look, we've seen price growth across the country. One area in particular that's seen some very strong price growth recently is Hobart. We're seeing this in the rental market as well. There's an absolutely quite severe shortfall of homes available in Hobart. So even though the population growth there is relatively minor, we're still seeing some very strong growth. If we look over the past 12 months, though, it's markets like Brisbane and Adelaide and Perth that have really continued to surge ahead. Those have been outperforming markets for a couple of years now, and so far, if we look at the momentum of price growth, they're not really showing too many signs of slowing down.
All right, and what about property vacancies? You've got some data out about that today as well.
Yeah, again, Hobart is the place in the country where it's most difficult to be a tenant. Just 0.7% of all the rental properties were sitting vacant at the start of the year. If we look around the country, though, we have had some improvement. So nationally, the vacancy rate is sitting at 1.5%. This is actually the highest level that we've seen for vacancies since around February 2022. So it's a very substantial improvement from back then. But if we think about what that means for renters, 1.5% is still well below the level that we would consider to be a healthy vacancy rate. So landlords certainly still have the upper hand when it comes to that dynamic between the total number of homes out there that are available and basically that tenant demand.
OK, so vacancy's highest level since 2022, but it seems like with the amount of supply shortages out there, we're going to be probably staying at this level now for quite a while.
I think a lot of it's going to have to do with investor demand as well. I think one of the reasons we did see the vacancy rate rise over the past year is to do with the fact that there were a lot more investors buying property compared to the previous year. So that's helping to increase the rental stock. But of course, there's a lot of discussion around policy to do with investors at the moment. You know, what could happen with the capital gains tax, what could happen with negative gearing. And I think that if we start to see policies introduced that reduce investor demand, that could actually have a detrimental effect on rental supply over the longer term, and certainly new housing stock as well, because at the moment investors account for around 40% of purchases of newly developed homes. So by reducing the investor demand there, that could also reduce the supply of new homes coming online, which could then again have consequences for rental supply and just new housing supply in general.
And has the Reserve Bank, by raising rates this month, last month now, we're in March, but in February, put any pressure on the property market and dented demand at all? Or?
Look, we were expecting to see that, and I think to a certain extent we've seen, consumer sentiment take a bit of a hit. I think, though, that when we look at the balance of the market, the total amount of stock out there for sale, where buyer demand is sitting, I think that even with interest rates rising, we really have a floor under what's going to happen with home prices, especially off the back of the policies we have at the moment, like the 5% home deposit scheme, which is really driving up demand at that more affordable end of the market.
And Flaherty from REA Group, thanks for coming on the show.
Thanks for having me.